We're also joined by Srikanth Nadella, whole-time Director and Chief Executive Officer of KFin Technologies. He's here in our studios. Srikanth, thank you very much for joining us. I'm Pavitra. And, it's good to have you here in the studios. And congratulations on the IPO opening. We just heard it from Surabhi, but, if you could take us through a little bit about the workings of the business as well. We do know CAMS is listed and is a direct payer, but if you could tell us about your business model as well.
Thank you so much, Pavitra. Thank you, Rima, for having me over. And a very good day and, welcome to all your viewers. KFin Tech is a leading platform-based solution provider for the capital market space, right? I mean, it's a company that's been in existence for a little over 37 years. We are one of the two players in the market who provide the solutions and services to all the mutual fund, companies in our country, the asset management companies. We are also the only, qualified registrar and transfer agent who operate both on the investor solutions as well as on the issuer solutions, issuer here being the corporate. Incidentally, not just this, we are also one of the central record-keeping agent to administer the national pension system. We also are present in India and deliver to the clients based in Malaysia, Philippines, Hong Kong, and soon to start in Singapore as well.
Can you tell us the key differences between your business model and CAMS for the benefit of our viewers? And also you were telling us that you have a higher or a majority share of the clients, but your AUM is smaller than CAMS. Why is that?
Sure. KFin and CAMS, so we operate in the similar space. As I said, both of us are called the qualified registrar and transfer agent. CAMS, we compete with them in the case of the mutual funds. We are also present in the issuer solutions, where there is an unlisted peer called LinkedIn. We compete with them. But in terms of other lines of businesses, we are differentiated because we are the only player who operate beyond boundaries. As I said, we have international presence. We have clientele based in Malaysia, Hong Kong, Singapore, and Philippines. We are also one of the at-scale, national pension system provider. We command a little over 5% of the market share today. Manage a little over 300 plus alternative investment funds that exist in the country out of the total base of 800. We're also differentiated because we also manage a certain amount of mortgage book for one of the largest mortgage player based in the US and Europe. So we're differentiated from that point.
International presence, alternate investment funds, which includes pension as well as mortgage.
Pensions, yes.
That's the key difference.
I know. So CAMS is also present in pensions. They just got the license to administer the national pension system, but we've been there for a little while longer.
Okay. And the difference between why your AUM is a lot small and the market share and the trends that we're seeing on that front?
See, based on the CRISIL report, KFin Tech's market share in terms of the asset management companies is today about 59%. So that basically translates to 24 out of 41 asset management companies in the country work with us. Yeah. As far as the AUM is concerned, that is a factor of how large our clientele are and how fast they've been growing. Historically, many of the bank-based asset management companies, have been with CAMS and they continue to grow. But if you see over the last 4 years, the trajectory and the velocity of the growth had largely been from that of the KFin Tech service clients. We have seen market share gains from about 26% to 35% in the case of equity. Okay. We have seen a SIP market share increasing close to 42%. So with the number of asset management companies and a win rate, that tends to add up a market share which continues to expand over a period of time.
All right, got that. I want to ask you about the issue as well because the IPO has opened today. We do know Kotak picked up around 10% in this around a year ago, November of 2021. That was at 185. Today, your issue is priced at almost double of that. Can you tell us what do you think is the key change that has come about in a 1 year period for it to be priced like this?
Sure. So I'd like to believe it's not just a 1 year journey, but then it's a transformation that's architected and probably started about 4.5 years back when General Atlantic Partners came into picture. It's a complete overhaul of the board. An independent board has been put in place. An independent management team led by myself, have been put in place. But when Kotak Mahindra, bank had come and invested in sub 10%, around that time we have, had certain KPIs we have published in our RHP. I think page number 128 if you look it up. See, at that point in time, we wanted to have a marquee Indian player known for corporate governance standards to come and validate, our governance standards too, right? At that point in time, the entire due diligence took, roughly about a year, and the KMB Bank have seen close to 3/4 of our performance, during that period of time. So basically, based on the 2020 financials, right, is how the entire deal eventually got consummated in November 21. The key performance indicators from then to now, if you see, our revenues have grown a little over 50%. Our margins have grown over 37% since then. Market share in mutual funds has substantially increased. International presence expanded. The pensioners in the case of National Pension System moved from about 250,000 to a little over 800,000 plus. So all of these speak about financial performance as well as a pipeline that we've substantially built and, make a significant movement from that.
Yeah.
Can you talk a bit about your margins? FY20 EBITDA margins were 35%. In FY21, it went to 44%. FY22 was 45%. But in the first half of this year, it's dropped to about 38%.
That's correct.
The reason for the drop and the longer term trajectory on margins, and how can you scale it up?
Sure. We've seen a consistent increase in the margins over the past 3 years. That's on the back of a superior run rate in terms of revenue, as well as a lot of automation that we could orchestrate and engineer in terms of our operations as the scale expanded. But it is also important for us to know that we are a company which is fairly diversified. We are very intentful of growing our international business. We are very intentful of growing our tech-based, platform-driven business. Now, all of those need certain investments. For example, in the 6 months that just went by, we have recruited country heads in each of the operating geographies, such as Thailand and Philippines and Malaysia, so on and so forth. So there is a substantial investments being made in terms of the business development, investments going into the technology side and the platform, so that we are not just ready for today, but then for tomorrow. We have also architected and, for example, led one of the largest IPOs our country had ever seen, LIC. And we have invested substantial amount of money to provide a market experience to the investors. So apart from those one-off expenses, I'd like to believe the trajectory in terms of profitability, we'd like to believe that we'll be able to maintain something that we've seen in the past.
So what are the margin range? What's the margin range you think you will be?
So we've been range bound, 40 to 45% in the past, right? And we'd like to believe that anything beyond that, if we could accomplish, we would love to plow back in terms of additional, modes for creation for the future.
So long-term margins in a range of 42 to 45%?
Well, if history repeats itself, yeah, I think we're working towards that. Yes.
Okay.
Okay, just one final question, because you did mention the international business as well. Right now, it's around a 90-10 split, right? Domestic to international. Where do you see that headed in, say, 5 years?
Yeah, so international for the period ending September was about 13%, right? And we have made certain acquisitions, not just managing the investor solutions, but also for fund accounting and administration, which also has international presence. We'd like to believe that, over time, we will be present not just in Southeast Asia, but, hopefully in the US and European markets as well. Okay. And we want to orchestrate a revenue pool of probably about 20% in the near term in terms of the overall pool, even as it expands.
So revenue contribution of the international business will rise from the current 13% to 20%?
That's our intent and working towards, yeah.
By?
Probably about a 3-year horizon.
3-year horizon. And how different are the business dynamics for the domestic business and international business? In terms of margins or in terms of growth rates or headwinds that you see?
See, I think it's on the international, especially on the Asian side, we render similar solutions as we render in India today, which is taking care of the investor side of the book, right? Whether it's asset management or hedge funds or private equity alternatives, so on and so forth. That business is not vastly different in terms of our operations. It is different to the extent that it is mostly orchestrating a win by moving in-house to an outsourced model, right? Largely, it's all in-house at this point in time, unlike in the case of India. That's got its own problems. There's a lot of inertia to move work, but then, we're able to orchestrate. We won about 25 clientele in a matter of 4 years since we started our international operations. But when you move to US and Europe, transfer agency is not a very prevalent business. Out there, it is fund accounting and administration. And that's a very exciting business too. A lot of international players are there. It's about a $4 billion business.
Okay, also you've mentioned in your DRHP that you are looking to acquire an account aggregator. Is there anything that's on the anvil immediately, or say by the end of this financial year, something that we can expect soon?
See, we have a board constituted business development committee, and then we constantly evaluate a series of options, whether it is in the space of an adjacency or to gain a market access or to expand a book of business. And account aggregation is definitely one of the adjacency we are looking at. We evaluate about 4 or 5 at this point in time, but hopefully I'll be able to discuss sometime later in the future. At this point in time, it's still in discussions.
Okay. So 4 or 5 companies are currently under evaluation, right, for an M&A? Due diligence is on.
4 or 5 companies we evaluate at any given point in time, and our appetite had been roughly to about under $10 million in terms of our investment appetite, and typically we've been acquiring about a company or so. We won't be able to acquire 4 in a single year, so probably about 1.
Okay, just one final question. What's the balance sheet strength? Why is it that the company is not raising money? How much cash do you generate to support your investments that you are making to scale up your international presence as well as your M&A plans?
Sure. See, So, much of our PAT converts into cash. We are an asset-light model. We do not have any, assets except people are our assets, quite honestly. It's just the platforms that we build on top of that. We're sitting on a cash and cash equivalents of about 172 crores for the period ending September 2022. Okay. We did not need further raise for primary for sustaining company's operations. Our international expansion is largely a factor of custom making our platform to fit the local geographical needs, which anyway we expense it out. Outside of that, it's largely just taking the people. So I really don't need capital to expand internationally too.
All right, Srikanth, thank you very much. We're going to leave it at that today, but we do hope to have you back here, and then, we will discuss more about the business as well, probably on listing days when we can speak to you again. But thank you very much for joining us. That is the management of KFin Technologies.